Well, good afternoon. Hi, Ric Edelman here. Thanks so much for joining us for this program here, sponsored by the Digital Assets Council of Financial Professionals, sponsored by SkyBridge. I'm really excited about this. Anthony Scaramucci, welcome. Great to have you.
Rick, it's always great to be with you. I hope you're doing terrific. I'm looking over my shoulder here at my Bitcoin position falling. Should I be worried, Rick? My Bitcoin position is probably down 12%. Should I be worried, Ric Edelman?
Anthony, I was going to ask you that question, and we're going to talk about it because that's the subject of today's conversation, the role of digital assets in modern portfolio construction. And before we get into any of that, Anthony, I want you to explain to folks who SkyBridge is, what SkyBridge Capital does, the products you have available. So give us a couple of minutes on this.
Well, no, I appreciate it. So founded in 2005, it was actually March 7th of 2005. My background quickly, I'm Tufts, Harvard Law School, worked at Goldman for 7 years, started an RIA. It was actually a private banker, if you will, or a high net worth broker, however you want to describe it back in the day. Left to form an RIA. We sold that to Neuberger Berman. Neuberger got bought by Lehman. And in 2005, I left Lehman to start SkyBridge. So just over probably $8 billion in assets now. That's a tribute to Bitcoin for that matter, because Bitcoin has had such a big move this year. We are a fund of funds. We have a fund of funds registered vehicle, if you will. We also produce the SALT conference, which is one of the leading, I would say, think tankish conferences around the world. We did one recently in New York at the Javits Center. Some of your team was there. We are about to do another one in Abu Dhabi in March. We've done it several times in Asia, twice in Singapore, once in Tokyo. And so it's in its 13th year. We're excited about it. And so we have separately managed accounts, commingled funds. We have an opportunity zone business as well. We developed a hotel with Richard Branson down in New Orleans. It's a Virgin flagged boutique hotel, sort of fantastic. And we obviously have a couple of portfolios with First Trust. We've done a few UITs. We're on to our third series with First Trust. Our first series launched in 2021. It's 17 stocks geared towards the digital economy, up about 40% from May of 2021. We're launching our third series today, so it's off with pretty good fanfare. And lastly, we went into the marketplace in September with a actively managed ETF. It's called the First Trust SkyBridge Crypto and Digital Innovation Economy ETF. CRPT is the symbol. It probably has the most correlation to Bitcoin, frankly. And it has names in there that people would recognize, including Coinbase and MicroStrategy. So that's about as fast as I can give it to you, Ric Edelman.
And that's a great summary. I appreciate that. And what we're going to talk about today, and I invite your questions as well, so feel free to type them into the Q&A section on your Zoom box. We're going to spend an hour talking with Anthony Scaramucci about the subject of crypto and its role in portfolio construction. And where I want to begin, Anthony, is really in the simple conversation of why. I mean, you have a long history in the financial services field. You're managing billions of dollars. You've got hedge funds. You now are launching ETFs, UITs. It isn't very common yet. There are some, but not very yet many financial industry, Wall Street executives, titans of the industry who have embraced Bitcoin and digital assets. What led you into that path, jumping down that rabbit hole? Why Bitcoin, Anthony?
So, it's interesting. I mean, you probably don't want this much information, but I'm going to give it to you anyway. People will remember my train wreck at the White House, fired after 11 days. Okay. We could also say 954,000 seconds. Sometimes I say it to my shrink that way. It makes me feel better. But prior to that, I was actually the chief strategy officer at the XM Bank. And President Trump asked me to go over there and to help him evaluate the bank. Should we keep that agency alive or not? Thankfully, he made in my mind, the correct decision to keep it alive. But in the conversations there, meeting people, the constant topic, and this is 2017, Rick, the constant topic was digitization of currency, the eventual digitization our currency, the fiat currency, the US dollar, the signaling from China that they will digitize their currency as well. And I left there saying, okay, I really have to get up the curve and understand Bitcoin and these digital assets. So when I was bounced from the White House, the first thing I did was buy the URL, skybridgebitcoin.com. And then we started to immerse ourselves in the blockchain and digital assets. And of course, at that time, if you'll remember, Bitcoin was in the process of crashing, going from 20,000, I guess, to 3,000 or 4,000. And I said, whoa, that's a ton of volatility, early adopting technological story. When could I get comfortable with Bitcoin? We are managing institutional money. We are managing money for what I call individuals. Those are people, those are individuals, Rick, that have the size and scale of institutions. And so they want an institutional process. They want thorough due diligence. They want to make sure that we're doing all of the box checking necessary to make sure that their money is safe, and they deserve that, frankly. And so I wrote down in 2018, if the following three things happened, I would become a Bitcoin investor, irrespective of what the mood was on Wall Street, the consensus, et cetera. The three things were: one, could we get to 100 million Bitcoin wallets globally? We reached that number probably in November of last year based on our best estimate. Today, in preparation for this event, I checked. According to Glassnode, we have 235 million wallets now.
Yeah, I was going to say it's a lot north of 100 million.
Yeah, so we're at 235. So one was 100 million. Why 100 million, Rick? You and I both understand the properties of the network effect. At 100 million, I felt that Bitcoin had reached escape velocity, and 100 million would turn to 200 and eventually a billion.
Well, let me stop you right there and elaborate on that point, because it's an important one. Metcalfe's law, everyone knows Moore's law, but not so many know about Metcalfe's law and the network effect. Just do a 2-minute elaboration on what you mean by that, because I think it's important.
So Robert Metcalfe, a fascinating guy, still with us, a university professor at MIT, he coined the term the network effect, which became Metcalfe's law back in 1981. There was a lot of conversation about breaking up the AT&T phone system, and they were trying to value the network itself. And in his testimony, he basically said the network itself has value. As an example, and an example he used, if you have one fax machine, well, guess what? It has no value. But if you have 100 million fax machines, Rick, now you have this information superhighway. And so what Robert Metcalfe said is, if you can create a scalable network, and then you can start dumping your goods, your services, your products, or in this case, transactions of goods and services on the Bitcoin network, the network itself has tremendous value. And so therefore definitionally can't be worthless if you have a network. Now, who understood that? Facebook understood that. Zuckerberg understood it. He became a social network. Bezos understood that. He became a retail network. Obviously, Sergey, Larry, and Eric, they understood that at Google, information, search, and advertising network. And Bitcoin, when Satoshi Nakamoto or the computer programming team developed it, they open sourced it, and they incentivized people to come on the network, to create nodes, to keep track of the ledger. There was a mining program, incentivization to grow the network. And I'll point out to everybody listening that the Bitcoin network has grown faster in its adoption than both the cell phone and the internet. And so I don't have charts with me today, but we can find those charts on the, just look them up on Google. In addition, Bitcoin itself, which we believe is a monetary network, is above $1 trillion, or it's somewhere between $1 and $1.2 trillion, depending on the day that it's trading. And that has been a faster adoption or faster move to $1 trillion than any of those companies that I mentioned. So number one for me, wallets, 100 million. We're at 235 now. Secondarily, storage. We know so many of the stories where when Bitcoin came into existence, people bought it, they put it on their BlackBerry, they put it on their Nokia phone, a USB. The USB is in a landfill. We know that one story about the poor guy that has his clunky laptop in the landfill. He thinks he's got $500 million of Bitcoin on it. He's offered to split it with the town could you please help me dig through this landfill and find the laptop? Of course, they said no. But you get the point that I'm making. If we can store it properly, well, then we're going to be in a really good situation. And then the last thing is regulation. Now, rightly or wrongly, we made the decision that the United States would never ban Bitcoin. And I based that on what the IRS thought of Bitcoin. Bitcoin is treated for tax purposes as an intangible piece of property. And if you study the law, I went to law school. I probably only learned one or two things in law school, Rick. Let me tell you what they were. The first thing I learned is don't be a lawyer. I thought that was the most obvious thing to learn in law school. And then the second thing was about property rights. The United States holds our property rights dear. They are sacrosanct in this country. If someone wants to take your property, the government wants to take it as an example, they have to pay you for it. Even there's a law of eminent domain. And if Bitcoin is intangible property for the purposes of taxation, then it will have protection in the court system about its revocation. And so unlike an autocratic country like communist China, the United States, a great decentralized governmental structure, not going to be able to take your Bitcoin away. We have 245 years of legal precedent. We also, if you want to take it back to British common law, you can say it's 900 years of property rights associated with these values. And so for me, I got very comfortable that Bitcoin would never be regulated out of existence. And of course, we learned on October 6th of this year that the SEC said no problem to the Bitcoin Futures Fund. We can talk about the cash futures and the issues there if you want, but they did say yes. That more or less signals to everybody that Bitcoin is here to stay. So last year at this time, Rick, all three of those measurements in my mind were met. We as a group, SkyBridge Capital, we deployed about $270 million into Bitcoin. We now own Ethereum. All told, we have a little bit north of $1 billion. If we did the podcast 3 days ago, I would have said we had about $1.2 billion. But right now we have about $1 billion of exposure, up from the 270. And what I would tell people, it is only beginning. If you're listening to this, it's because you have the intellectual curiosity. If you're listening to this, you may own some of these cryptocurrencies or understand the technical properties of the blockchain, or you may not at this time. But if I would say to the people that don't have exposure, let me give you very, very good news. You have less than 3% adoption for Bitcoin. Let me give you this example. Facebook has 2.9 billion users. Imagine being able to buy Facebook when it had 235 million users. That's the opportunity ahead of us for Bitcoin. And so I would tell the people listening to your programming, please do the homework. Anybody that does the homework ends up making the investment, whether it's Paul Tudor Jones, Bill Miller, Ray Dalio, legendary investors like Dan Loeb or Steve Cohen. Doing the homework, they make the investment. If they don't do the homework, Warren Buffett, that was a fake cough, by the way, right? Or if they don't do the homework, his 97-year-old brother, Charlie Munger, they'll say things like it's rat poison or rat poison squared.
Or Jamie Dimon calling it worthless and no intrinsic value.
Well, I think it's a prideful thing for Jamie more than it is anything else. You know, he called it worthless and then he got a signal from his team. Oh, by the way, we're working on stable coins and we've got hundreds of millions of dollars invested in the blockchain. And so now he's, I guess he equated it in his last big interview to pot smoking. He said he doesn't smoke pot, but he's going to bank pot if it's legal. I got that, but I think Jamie, if he does more homework, he'll realize that there's huge value in that network. And so technically, I think he's wrong about that. I don't think it's worthless. And I'll point out something that is worthless. You want to see something worthless?
Yes, other than the mirror of my
reflection.
reflection.
This is interesting because I usually have US dollars on me, right? But I'm going to London tonight. So look at those. Okay.
Are they in Zimbabwean dollars?
No, these are British pounds. Here's
British pounds.
You know you're not in the United States when there are people other than dead white males on the money. Look at the queen there on the money, right? We only have dead white males on our money. But look at this thing. It's a piece of fabric. Some of it's plastic, actually. There's a counterfeit strip. But what is this? This is we We call it paper money, but it's a piece of fabric. We exchange it with each other. It's got numerals on it and some fancy pants writing. And so we've accepted this as legal tender, but philosophically, intrinsically, what is it worth? Nothing. It's a piece of fabric. But we've accepted that we can give it to somebody in exchange for goods and services. And they like that because they know they can give it to somebody else in exchange for goods and services. And so that's what the premise in Satoshi Nakamoto is saying. Our money is a technological ledger. We got it from our government because our government is a trusted third party. What if we could create money and decentralize it, and so that we could empower ourselves to connect to each other over the blockchain? So even though I don't know you, may not even like you, don't have to trust you, I can transfer value peer to peer without a trusted third party over the blockchain. You know it's left my wallet. I know you've received it in your wallet. And I want everybody to take a deep breath for a second and think about the magnitude of that. That is a massive delayering mechanism for a society. And so a couple of quick examples. I'm in a restaurant with you, Rick. I'm going to pick up the tab because I'm trying to show you that I'm a good sport. I got to take out my American Express card. What is that? There's a magnetic strip on it or a chip. That's obviously worthless. I give it to the guy. He puts it in the machine. It spits out whatever it is. I pay it at the end of the month. We've got a trusted third party known as American Express paying the restaurateur. I'm paying American Express, trusted third party. What if I could go directly to the waiter? Here's my smart wallet on my smartphone. Software's eating the world. I've got these cryptographs, which is effectively a ledger. That's what our money is. And it's a very tight ledger and it's a scarce ledger. So it's hard money. No central banker can manipulate it. No policymaker or politician can manipulate it. I'm going to send it. I'm going to beam it to you. And we just took out that third party. As hard as this is for me to understand, it's a 3%, Rick, a 3% royalty stream on every restaurant in America for MasterCard, every restaurant in the world for that matter, and most every hotel, et cetera. Imagine taking that out. Imagine the cost savings, the efficiencies. Ladies and gentlemen, if you're listening, that is coming. You may not like it. You may not want it to come, but that is coming the same way. Rick and I are roughly the same age. I don't know about Rick, but I made a phone call from Rome to my parents in 1985. I had to wait for a phone booth. I got a little ticket from the postal clerk. They charged me $15 equivalent in Italian lira to make a 5-minute phone call to my mother. Of course, I lied to her, told her I wasn't hungover. The phone thing shut off. I was done with the call. $15 for a 5-minute phone call. Look at this. I can take this now. I can log into the cafe in Rome, into their Wi-Fi. I can make a digital call to my mom. I might even be able to FaceTime her, although if I was hungover, I probably don't want to do that. But I can call her, and I can call her costlessly. That is going to happen to finance. You better get ready for it, whether you like it or not. And the blockchain has the capabilities of allowing that to happen.
What you're referring to is disintermediation, a big fancy word for eliminating the middleman. And it's fascinating with the example you cite about how that 3% fee that credit cards charge simply is the intermediary facilitating the transaction between the buyer and the seller. The restaurant's selling you the food and you eating it as the diner, the buyer of the food. When El Salvador established Bitcoin as official legal tender, it was immediately projected that Western Union is losing $400 million because people no longer need to send money via Western Union. Transmittals from the United States to El Salvador is about 20% of their GDP. And consumers have been using Western Union to get money to family in the old country. Now Bitcoin's letting them do this, and a third of the country is already using it, disintermediating Western Union. That's just one tiny example of one little country in the world using this new technology in a way that's disrupting the banking system.
Yeah, and I agree with all that. I just want to add something to that. I just want you to imagine the magnitude of what Amazon did yesterday. And so for those of you that didn't see the news, Amazon in the UK said no mas to MasterCard. No mas, 3.5% fees, not taking it anymore. We have a firm on our system, the buy now, pay later company. We have other ways to exchange value with you. We don't need to have MasterCard have a 3.5% revenue stream royalty on our everything internet store. Whoa, that is a big blow to MasterCard. It is a big blow to the old system. It's one of the reasons why MasterCard and Visa said in 2018, we'll never do a Bitcoin transaction, and why they are now leading the world in Bitcoin transactions in 2021. And so you're going to get with the program one way or the another. What I'm recommending to our investors, and I'm recommending to the old world, is embrace the new world. Don't be afraid of it. Understand what it is. That's not to say that everything's going to work out. Rick, you and I are old enough to remember the internet age in the late 1990s, where pets.com went bankrupt, eToys went bankrupt, but long live Amazon.com. And then obviously a couple of years later, after the dot-com bubble, Google came public. And look at what that stock did. And then we had Web 2.0 with Facebook, et cetera, the social media stocks. We are now in Web 3.0. We're going to use the blockchain to change the world once again. And I'll remind everybody what Mark Andreessen said about the blockchain. He said, whoa, I invented the Netscape browser. That was a major piece of technology, led to a lot of digital innovation, transformed our economy and our society and our culture. The blockchain is bigger than my invention. It's bigger than the internet browser. And so I want you to just stop and think about that for a second. I believe he's going to be right. And I believe that we're going to have a big opportunity here to change the world again for the better. It'll lead to more prosperity, as it's doing in El Salvador. It'll lead to better savings, I believe, longer term, higher interest rates for savers, longer term. All these things are quite positive.
One thing that the government of El Salvador has already reported is a reduction in street crime as a result of Bitcoin, because in the past, mom had to traipse along a dirt road for 10 miles to get to the Western Union location where she got her cash. And crooks know that mom's walking into that store, coming out with money. Now she's getting it on her digital wallet on her phone without having to worry about the fact that crooks are going to be trailing me out of a retail location. So we've already seen an indirect benefit, a reduction in street crime as a result of the digital usage. What I'm really finding fascinating here is that your entire conversation so far, Anthony, has been a very thoughtful, measured, analytical, and intellectual examination of the technological innovation and the commercial use case of this. What you haven't said is what I so often see in chat rooms and in other articles and such, of people just talking about how Bitcoin is going to be worth $500,000 a coin or $1 million a coin or what have you. You know, just the greed factor, the get rich quick factor, and the other kind of hype that we so often see in an environment. What you're providing is a very thoughtful examination. And this is what I really want folks to be paying attention to. We've got some serious-minded people paying attention to some serious issues. And the more you study this from a technological perspective, the more you begin to understand the rationality behind this. So with that as a premise, what I want you to do is walk us through the pragmatics, the practical element of this. Let's assume that we accept the premise that Bitcoin and other digital assets should have an exposure in a client portfolio. I want you to answer two questions. We'll take them one at a time. What percentage of the portfolio belongs in this asset class? And second, how do you do it? How do you gain it? You know, we have so many different opportunities of variation of being able to buy. You know, 10 years ago, you had to go to an exchange to buy Bitcoin. Today, there's a wide variety of product available, including outstanding products by SkyBridge, which I personally own, by the way, just for disclosure. So talk about, first question, Anthony, what percentage of the portfolio do you believe should be allocated to Bitcoin?
Before I do that, if you don't mind, because you're talking about speculative frenzy and people talking about $500,000 a coin, again, reminiscent of the internet age. And value investors stayed away from the internet age, and they missed out. They missed out on that incredible arc of growth. And I think you can participate here. There will be winners and losers, but if you're in a basket of things, I think the tremendous growth of that basket, if you will, is going to really help boost the return in your portfolio at a time where there's a little bit of an existential crisis going on. You have very low interest rates and you have high inflation. So I just want you to think about that for a second. We're probably artificially suppressing these rates because we can't have the federal government pay a 3% load on a $30 trillion debt bomb. And so we've got low rates. The government's manufacturing money. If somebody tells you that the United States, Rick, is not a manufacturing company or country, point out that they manufacture US dollars, and they've been doing it at an alarming rate since April of 2020. So the first question that you're asking, I'm saying 0.5% to 5%. Now, what happened to me and SkyBridge, we put a 4% position on a year ago that has now grown to 24% as a result of good performance. Now we're vexed with the dilemma.
Yep.
How do you handle that? What's the most prudent thing to do? Do you shed the asset, even though you think the asset's going higher and it's got great fundamentals? Like software's eating the world, Bitcoin is now eating my portfolio in terms of percentage of allocation as a result of its great success.
I was going to ask you about that. And should you rebalance? Do you sell some?
So the short answer to that is not yet. The longer answer to that is yes, probably, but not yet, because I think the fundamentals are too strong. And people were calling for institutions to enter the marketplace in 2021. I didn't see many institutions enter the marketplace, frankly.
Right.
I think that was some hype, but I am now seeing it. In fact, I got my buddies in the industry, these guys that own Bitcoin, they're yelling at me. I'm on CNBC. They say, I'm sorry, I don't see the institutions. I'm getting texts. Why are you saying that? I said, well, because it's true. Okay, that's why I'm saying it. But I'm now saying I am seeing it. And so I see possibly in 6 months, the introduction of a Bitcoin cash ETF. I think that will come with huge demand. I think there's benefits to having it in the cash versus the futures market. And I also see a scenario where that 235 million wallet number goes to 500 million wallets over the next 18 months. And because of the scarcity of Bitcoin, it's going to force the prices up. So for me, I don't want to be a seller of Bitcoin at this moment. But if you were starting today, and I think these are still early innings, it would be 0.5% to 5%. We chose 4 in November of 2020. The second piece is a little bit more difficult.
Now, wait, before we get to the second piece, let me elaborate on the first piece with you, because this is a really key notion. Ordinarily, when asset allocators are slicing that pie, trying to figure out how much money to put in a given investment or asset class, the percentage allocation is the key question. We all know that the amount you put into an asset is the key determinant of the portfolio's success. So normally we know that if you're not doing a really meaningful amount, if you're not doing 10, 20, 30, 40% of assets, 60% of assets into an asset class, you're wasting your time. Why bother? You just set a range of 0.5 point to 5 points. That is ordinarily what most people would say such a small allocation to be pointless. So 2 questions. Number one, why is such a small allocation sufficient? And second, if you're so bullish on this asset class, why only 0.5 point to 5 points?
Okay, so there's a lot of layers of that. So I just said I've got 25% now and I'm comfortable with it. So obviously some people would say that I'm irresponsibly long and other people would say I'm not long enough.
Would you tell people to start with 25% today, since that's where you're at?
I wouldn't, because I understand that the psychology around money management and the psychology around someone's own money. And I also understand the fear and uncertainty and doubt related to Bitcoin and related to this new technology. The same way Bill Gates said that the internet is a fad, and then 18 short months later, he had to correct himself and start building Internet Explorer. We're in that interregnum period of uncertainty by the establishment.
It's also one thing to lose profits, which is what would happen to you, versus losing principal, which is what would happen to someone else.
But you see, but again, not really. See, so well, I'm going to intellectually challenge you on that. We should be marking ourselves to the market, irrespective of our profits. But you just proved my point.
Well, That's exactly right. It's the behavioral finance. It's how people think of it.
And money, we are attached to our money in this psychologically irrational way. We try to pretend that we're rationalists, but we're wholly irrational beings. And I want clients to do what George Soros said. You know, we've politicized George now, but when he was to just be a pure investor, one of his best lines was invest first, investigate later. So I'm trying to get clients off of their zero yielding bond portfolio and gravitate into this asset class. And so I want them to start slow and small so they don't get scared by it. If you put Bitcoin on May 1st and you bought it at 62,000 and it traded to 29,000, maybe that would scare you off. You know, people got scared out of Amazon. Jeff Bezos is famous for constantly retweeting that Barron's cover story of him where it says Amazon.bomb, the age of this internet retailer is over. Of course, he framed it, put it in his office, but he basically said to people, be patient. We're scaling pursuant to Metcalfe's law. Someday we're going to be the everything store, have a big share of the retail sales in the US, and we're going to mint money. They made $21 million of cash profits, $21 billion of cash profits last year. But people got juked out of it because if you bought Amazon on the IPO, you put $10,000 in the IPO on May 15th, 1997, it's worth $22 million today, Rick, but you had to subject yourself to 8 periods of time where you lost at least 50% of value. And so if you have a 0.5%, you lose 50% of value. You might have the strength and investment discipline to stay with it. If you put 25% in and you immediately lose 50% of value, you'll be pulling your hair out or what's left of your hair, and you'll be castigating your financial advisor. I also love that part of our lives as financial advisors. We get blamed for stuff that had nothing to do with us. You know, I'm blamed for my performance during COVID-19 and you missed it and you lost money. Well, I didn't really lose money. You just got to be patient. Of course, people sold out because what do we know? We know that people are long-term investors until they have short-term losses. The minute they have short-term losses, Rick, they snap the hair on fire, they run around in a circle.
And that's really the key thing that advisors are focusing on, because we don't get credit for upside, but we get blamed for the downside.
100%.
And advisors are fearful of the risk of losing clients. And that's why they're hesitant to doing this.
So what I would say to advisors is my old boss, 84 years old, a real elder statesman at Goldman Sachs, now living in Palm Beach. He said, what do you do for a living, Anthony? We manage wealthy people's money. That's right, Anthony. So what's the mission, Anthony? I said, well, you tell me, sir. He said, well, I got it down to 2 words. You want to hear the 2 words?
Yeah.
Stay wealthy. Okay, that's the goal. Okay, if you're a financial advisor listening in, your goal, the client's already wealthy. You secured the client as a result of their success in business, or maybe they're a legacy, a grandson or something, a granddaughter. But your goal is to keep them wealthy. So if you're sitting there and you're looking at Bitcoin, you're like, okay, this may not keep them wealthy. But my answer to that is this is going to make them not only wealthier, but it's going to protect their wealth. Because if we're right, and there's a seismic change in activity over the next 10 to 15 years, having a toehold position, and it mushrooms the way an Amazon did, or a Facebook, or a Google, it will be significant enough in a few short years that 0.5 to 4% position will be significant enough. Well, you'll look around and you'll be rewarded by your wealthy individual or your institution for having that fortitude. I can't name the name of this sovereign wealth fund, but when we made the investment in our core fund, and they had been an investor for 15 years, we made the investment in our core fund and reported that we had 4% Bitcoin exposure. They called to fire us. You're going to get fired by us. We don't want this in our portfolio. Okay. Went in to see them, laid the case out. They said, okay, we'll give you a few months. Last month, when the Bitcoin futures ETF was approved, I got a call from the head guy. Anthony, thank you for pushing and pulling and dragging us into the future. Again, it was a small position. As I pointed out to them, if SkyBridge is 2% of their portfolio, and I have 4% of my portfolio in Bitcoin, you have an 8 basis point position in Bitcoin. Don't you want to have at least a toehold in Bitcoin? And now that's grown to about a 40 basis point position. But the point being, I want people to get started. Red Auerbach, who won many championships in Boston, a very famous GM and coach, Red once said, great line, I don't care where people start. It's all about finishing. You know, he had a 5-game losing streak when the Celtics started one year. He said, I don't care where we start. It's where we end. Of course, they went on to win the championship that year. I want my clients to get started. I want my clients educated. I want my clients to not fear it. I want my clients to know about it, because if they know about it, the more you know about something, the less you will fear it.
And so you've answered the question, how much should you allocate? 0.5 point to 5 points, the way to get started without creating too much opportunity for fear that could drive you away while selling low. Now talk about how to implement. Obviously, this is going to be a little bit of a conflict because SkyBridge has an implementation opportunity. So contrast the SkyBridge offerings that you have, your ETF and your hedge fund, your private placement offerings, with alternative ways, other ways that people can gain access for their portfolio. Talk about the different pluses and minuses of each.
Well, we saw it as a macro theme last year. We put it in our core portfolios across our platform, but then we also started a private partnership called the First Trust SkyBridge Bitcoin Fund. It's really the only way you can access it, the cash of it, in the United States right now is through a private investment partnership. You could now buy the futures, but remember, there's an arbitrage spread between the cash and the future. There's some grinding there. It doesn't lead to an absolute pure exposure to Bitcoin sometimes. You could be slipping a little bit there. And then you have the Grayscale Trust, which I think these guys have done a phenomenal job. My hat's off to these guys.
And Bitwise and Osprey, similarly.
Yeah, right. Yeah, these guys, my hat's off to these guys. They've done a phenomenal job. But the trust structure will sometimes trade at a premium. It will sometimes trade at a discount. And
the OTC version of those products, right?
Yes, exactly. The OTC version. So you could own it in a Coinbase account, buy it directly, sit on it. You could own it on a USB, get the keys, have a password, sit on it. Or you could own it with SkyBridge. You could own it now in the ETF, the futures ETF. You could buy SkyBridge Series G, which has exposure to it, but also a collection of hedge fund managers. There's a whole host and assortment of different ways to own it. But here's the thing that I would say to people: own it. Go buy some of it. You don't have to buy it with SkyBridge. That's fine. Okay. I think if you buy it with SkyBridge, we have all the safety mechanisms, the institutional checks on things. We are clearing it at a Fidelity Digital Assets. It's in cold storage. Ernst & Young is our auditor. Davis Polk & Wardwell is our legal team. We have some of the best and brightest third parties.
The account minimum?
Yeah, well, the account minimum on our fund is $25,000. I really remember I started SkyBridge with the notion that we were going to democratize the hedge fund industry. It used to pain me that people like my mom and dad, my dad was a crane operator. I grew up in a blue collar area. Well, if you were of modest means, you couldn't get access to the best money management in the world. That was reserved for the very rich, and that was reserved for the highest institutions, the highest level institutions or university endowments. And so the whole genesis of SkyBridge was we were going to create products where we could chop the minimum down to 25,000 and provide access. Again, it's not the super modest people, but it's a hoi polloi of people now that have way more access to things that they couldn't get access to before. But here's what I would say. Any of our products, we filed for the cash ETF. Our application is in, then X application has been denied. We're in line. Maybe we'll get denied. If we do, we'll re-up the application. We'll find out whatever it is the SEC has an issue with. Some of it, I think, is related to price discovery and Bitcoin not effectively having a clearing exchange like a stock exchange. But listen, if that's the case, Rick, we'll eventually, we're persistent people. We'll eventually convert our private partnerships, our Bitcoin fund, our Ethereum fund into ETFs. I also have an Algorand fund, which we're launching on December 1st. I think you and I have talked about that.
Mhm.
I do think there will be a couple of winners in the cryptocurrency world, not just Bitcoin. I'm not a Bitcoin maximalist. I see the advantages of Ethereum and things like Algorand, these layer one protocols. I would also tell you that I'm not a Bitcoin evangelist. Saylor gets mad at me when I say that because, he snorts Bitcoin every morning. This guy, he's got a fire.
And Anthony's talking about Michael Saylor, the CEO of MicroStrategy, who owns what, $7.5–8 billion worth of Bitcoin.
Yeah, he made the investment before me. He had his eureka moment in August. We got there at SkyBridge in November. But Michael
and he's, as you said, Bitcoin and only Bitcoin.
Yeah, he's a Bitcoin maximalist, a Bitcoin evangelist. He's at odds with me with this. I mean, cheekily at odds with me, teasing me. I don't think Bitcoin, I don't think Moses got together with Jesus. They made a baby and they named the baby Bitcoin. That's not me. Okay. I think that Bitcoin should be in your portfolio because it has a use case. And the blockchain is this transformative technology, and Bitcoin is a technical property. It is electrical energy that is now currency.
So let me say two things.
And it's easy to move, and you should own it. And by the way, you've got this stuff. This is just the ledger, ladies and gentlemen. And so, you know what? We've improved on the ledger, and they make this stuff. They make more and more of this stuff every day. Let's cut it out. Let's have something that's a little bit more sacrosanct.
So two things about the Bitcoin evangelism. Bitcoin matters. It's important. It's the leader. It was first. It's about half of the entire market cap of the ecosystem at $1.5 trillion in assets. But Bitcoin has limitations. It's dumb money. If I send you Bitcoin, you get it instantly. I might not want you to get it instantly. I might want to wait for you to do something, such as send me concert tickets, or send me a deed, or wait for the weather to hit a certain temperature, or somebody to win an election, or a sporting event. That's why Ethereum was built, so that it creates an if-then arrangement, a smart contract, so to speak, which is why there's so much excitement about Ethereum as an alternative to Bitcoin and why you have an Ethereum fund. So I agree with you. These different coins have different purposes, different uses in global commerce, and why the ecosystem is more than just Bitcoin. But having said that, I want to go back to something else that you said that's really important that advisors struggle with. Many advisors, and the reason I asked you the question, Anthony, of how do you implement, how do you execute? Many advisors are caught up in the notion of what's the best way to buy Bitcoin. And what they're not recognizing is be directionally correct. Whether you do any of the above ideas that Anthony has just suggested, going to an exchange like Coinbase to buy your Bitcoin, buying MicroStrategy stock as a proxy for Bitcoin, buying a publicly traded Bitcoin miner like Riot Blockchain, buying a hedge fund like Anthony's, buying the OTC securities that are available, be directionally correct. Instead of asking what's the best way to buy Bitcoin, you should be asking yourself, how do I operate my practice? Which methodology fits best within the way I run my practice and the kinds of clients I have and the way they like to own investments? There are so many different ways you can do this. You can find the methodology that is best for you. I personally believe, Anthony, that the products you offer provide best of class kind of evaluation, that advisors who are struggling with how to go about this would do themselves a favor to look at the offerings that SkyBridge has on the market.
Well, I appreciate you saying all that, and I again, I think I'm always philosophically about collaboration, Rick. I'm not in the business of denigrating competitors. I'm not in the business, when you think about the SALT conference as an example, we invite all of our competitors, whether they're fund of funds, hedge fund managers, Bitcoin asset managers, digital asset managers. My attitude is I have figured out a long time ago, us collaborating together and us creating more mechanisms so that we can win together is more valuable to me. There's some people in our industry, as you know, you and I have been around a long time now, that view the industry as a zero-sum game or view the society as a zero-sum game. I do not.
Right.
If you're going to make that investment with my friends over at Grayscale, you should do that. There's strengths and weaknesses to their investment offering. There's strengths and weaknesses to my friend Michael Novogratz's offering. And by the way, there's strengths and weaknesses to our offering. But here's what I would say. Learn about it. Do the homework, do the research, and get yourself involved. Because if we're right, you'll be very grateful that you didn't miss this. I missed Amazon. Can I tell this quick story? Because it
Sure.
doesn't reflect well on me, but I'm going to tell the story anyway. I'm in a meeting at the Sun Valley Allen and Company conference. It's 1999. A gentleman by the name of Jeff Bezos is speaking. I'm taking notes. He says three things. One, I'm not an internet bookseller. Okay, you see, a book is designed so that you can. It's roughly the same height and weight and so forth. I went into book selling so I could figure out logistics. They're easy to ship, and I can dot plot the warehouses everywhere. And I'm going to eventually be the everything store where I'll sell you everything. And oh, by the way, I'm going to lose money. Number two, I'm going to lose money for a decade. Just going to take your money in the form of preferreds and convertible bonds and sell you stock and lose money because I got to build this network. But when I'm done building the network and all the pipes and plumbing are there and I switch everything on, we're going to make a fortune together. Are you ready to do that? And I was like, wow, this guy's a genius. I wrote it all down. I said, I'm ready to make this investment. The next speaker, Ric Edelman, was a guy named Warren Buffett. You ever hear of the guy? So he comes on and he says, yeah, that's a great conversation from Jeff Bezos. Seems like a smart young man. I would never buy a penny of that stock. Oh, that stock's going to lose money for the next decade. Did you know that stock has a higher market capitalization than Sears Roebuck, this legendary brick and mortar retailer, this renowned storied retailer? And, Jeff, you seem like a really nice young man. I would never buy a share of that. And so I ripped up my notes. I threw them in the garbage. I said, okay, I'm never going to buy this stock. Mr. Buffett said not to buy it. And I missed Amazon. And as I pointed out to people, that $10,000 investment went to $22 million. If you were smart enough to buy it after the global financial crisis, you win 64-1 on the money. $1 million is now worth 64 million. And I didn't buy it then. I didn't buy it in 99, and I missed it. And I tell my clients, you know what? I'm not going to let you miss this. This has the same arc. This has the same network explosion. In fact, in some ways, it's decentralized. You don't even have the corporate politics or the office suite innuendos going on, which is the reason why it's grown faster than a company. And I don't want my clients to miss it. And so if you're listening, don't miss it. You don't have to buy it with SkyBridge, but go out and buy it, own a piece of it.
Now, there's a very pragmatic in the trenches issue that is preventing a lot of advisors from engaging. And it has nothing to do with their lack of education or their lack of desire or their lack of motivation. That's certainly true for a lot of advisors, but I'm going to put this camp in the category of want to do it, but I'm not doing it. And the reason they're not doing it is very simple. They're affiliated or licensed or employed by a broker-dealer or financial firm that won't let them. The
Yes.
firms have not given approval
Right.
to forget about selling a product. They won't even let them talk about it.
Correct.
How do the advisors proceed? How can they convince their employers, their broker-dealers or RIA firms to engage in this space?
Well, a couple of things there that I would say to you is the first thing that I would say to you is that's where SkyBridge could come in, because we invented, or not invented, we created some UITs that are geared towards a sleeve of 17 securities that you could put in your portfolio that are all publicly traded, that you could get exposure to the digital and crypto economy. Our ETF, CRPT, it's publicly traded, so it's very liquid. You can buy and sell it all day. But there's 30 stocks in that portfolio. Some of the big names are Michael's stock, MicroStrategy, a Bitcoin holding company, effectively, Coinbase, Marathon Digital Assets. Our two products, the UIT or CRPT, the publicly traded ETF, are really designed for that FA that you just described. He's intrigued, she is intrigued, wants to participate. Maybe it's verboten at their organizations right now from a compliance point of view. And so they've said, okay, no problem. I'm going to get my exposure this way. And I also think it's an easy sell to a client. It's like, yeah, you're hearing a lot about Bitcoin. We can't really buy it here at our firm, but I'll tell you what, there's a group of stocks that are growing at 50+% in terms of their revenues as a result of this information superhighway and the architecture and the wallets that are being created Do you want to get some exposure that way? And yes, it's very liquid. You can buy and sell it immediately if you need to. And that's been a success. Since we started that program, we have over $250 million in assets in that program. And I would imagine that'll be one of the faster growing parts of our business going into 2022 and 2023.
And I think that that's something that people really need to focus on. If you have an interest in this asset class and you are struggling because of the limitations imposed on you by your legal and compliance department, your operations department, or your sales and marketing team, bring in outsiders. All you need to do is persuade your management to take a phone call, to take a meeting, Zoom or in person. Anthony will be happy to have a conversation with your team. So will I. We do this work often at DAC FP, working with firms to help them understand that it's not nearly as scary as they think. Firms are predominantly concerned about two things: regulatory risk and reputational risk. And they don't want to go into this space if they're fearful that the SEC or FINRA might object, or they might get embarrassed, causing them to lose clients and assets, which represents a much bigger piece of their investment AUM pie. We can demonstrate, as Anthony has just suggested, a lot of ways that firms can engage, that they allow you to engage, that we can provide the training for you from a sales and marketing perspective, from a client relationship perspective, and education perspective on how you can engage in a totally compliant way that isn't risky, that isn't scary, that doesn't have the kind of reputational or regulatory risk that many fear exists. And as Anthony has articulated very nicely throughout this entire conversation, the folks who have those fears generally are the folks who haven't done any due diligence or research or education themselves. Because once they engage in that, they begin to realize that that stuff just melts away. There are ways you can easily, confidently, safely proceed. And all you need to do is convince your firm to open the doors. And the motivation you give them is that if they engage, you'll be able to attract more clients and assets. And if they don't engage, you run the risk of losing clients and assets to the competition who is engaging. So you've got both a carrot and a stick with outsiders who are very ready to provide services and education and assistance. So you don't have to invent the wheel from scratch. You can learn from the best practices of others, and you'll discover that the water's fine. It's okay to jump in.
Well said. Really well said.
Let me ask you this. You started the conversation today with what should you do? Bitcoin is down 12% in a day. That's not the first time this has happened. Last March, it fell 50% in a week. We saw an 84% loss back in 2018. Bitcoin has had several market crashes. That's just an inherent nature of the asset class to date. Tell me your viewpoint on major volatility. Is this a reason to stay away? Should it alter the way you proceed? Give me your thoughts and views on volatility and how investors ought to react.
I was obviously being facetious. I guess one of the good things about Zoom, you can see people's facial expressions. So, I was being facetious because I fully expect Bitcoin to have a big bandwidth. If you tell me Bitcoin's 29,000, 80,000, I'm not going to look at Bitcoin day to day. I've accepted that Bitcoin is going to track as an early adoptive technology story. And so I ask you please to look at technologies like Amazon, Facebook, Google. I ask you to look at the technical properties associated with these things and the volatility of an early adoption story. This has 3-ish% saturation globally. I would ask you to think about having the opportunity to make that investment in Facebook when it had 200 million users and it's now at 3 billion. And if you're going to measure it day to day, you're going to have a lot of trouble. And I think you'll be emotionally tied to it and it'll wreak havoc on you. But if you can put it away and hide it and not think about it, I think you'll be very well rewarded by that process. There's very few people that rode Amazon from the IPO to the November 2021 time period. Jeff Bezos did, Mackenzie Bezos did, but very few people did because they got juked out. They bought in, it was dropping. Oh my God. How many times in your life, due to emotions, do you sell a low and buy a high? And so I would tell people, please don't do that. Stay long-term. Recognize that with a story like this, there's going to be uncertainty related to current short-term price. I'm going to say this, Rick, and I mean this, and I hope people do pay attention. Volatility is not a measurement of risk, because if volatility comes with duration and you are correct on the fundamentals, then volatility is an opportunity for you. You know, when Coinbase came public, I'll embarrass myself, I bought the IPO, 420, where the hell it was, the pot smoking number. And then it proceeded to drop to 220. And oh, wow, I could kick myself in the pants, or I could continue to buy. And every single month, I layered on new investments into Coinbase, 220, 230, 300, 280. And my average cost now is well below where Coinbase is trading today. And I think Coinbase, if you've listened to nothing that I've said today on this podcast or this seminar, listen to this. Okay, this is a prediction I'll make. Coinbase will be a $500 billion market cap company inside of this decade. It's at 75 billion right now. It will have a $500 billion of market capitalization, and it will be fairly valued at that number as it continues to grow. Do you really care if you're buying it at 300, 400, or 200? I don't care if you're buying Bitcoin at 65,000 or 29,000. You're going to be a very happy camper when it's trading at 500,000. And you'll be scratching your head saying, why was I so reluctant to buy that high? Last point, and I promise this will be the last one. How many people in the world of technological growth that bought all-time highs, it turned out that was the right decision? And the answer is so many. 2010, Apple's all-time high. If you bought it, look at where you are today. Microsoft's all-time high in 2000, right before the dot-com crash. If you bought it, look at where you are today. And so, you know, in some ways, you are not the fool buying the all-time highs. In some ways, it's a signal from the consensus in the market that something is doing quite well.
That's Anthony Scaramucci. Thanks so much for joining us today on this, Anthony. Wonderful conversation as always with you, my friend. You want to learn more about what SkyBridge offers, you can reach Anthony at skybridge.com's website or contact IR at skybridge.com. And if you would like to learn more about all of this, then I encourage you to check out our upcoming webinars on December 2nd, the remarkably easy way to allocate to blockchain and digital assets. And on January 5th, the silent killer, the biggest threat to advisors and how you can protect your practice. And for the ultimate knowledge, we encourage you to attain your certificate in blockchain and digital assets, an online self-study 11-module course, 13 CE credits. It's just $549. You'll learn what you need to become fluent and knowledgeable so you can talk intelligently with your clients. Get all that info at dacfp.com. Anthony Scaramucci, my friend, thanks so much for taking the time. You've been really helpful. I think you're going to get a lot of phone calls from the folks who have watched this event. Thanks to everybody for being here. Anthony, we'll talk again real soon.
Thank you. Great to be with you, Rick.